Well, hello, beautiful people. This is Jessica Jones with Taurus Financial Solutions, coming to you today with a quick video on how life insurance is paid out and also how annuities are paid out. I get a lot of questions on this because of a lot of misinformation, number one, and also policies have really changed over the years. So I just want to address that because I do get questions on this. So number one, I've done a couple different videos on life insurance, the types and how and why and beneficiary reviews and things like this. But I got some questions recently on how it pays out and what the payout, how it works. So in very simple terms, life insurance is paid out directly to a beneficiary or beneficiaries. Typically, you're going to have a primary beneficiary or primary beneficiaries. You can split it. There's really no cap on the amount of people, really. Typically, most community property states are going to make you put your spouse on as primary beneficiary. So just be aware of that. Two, otherwise they have to consent not to, so you can't go behind their back. Usually they're going to have to notarize a consent that they are not the primary beneficiary on your life insurance. So just be aware of that if you're in a community property state. But typically it's going to pay out directly to them pretty quickly after you pass away. Usually you're going to have to call the company, file a claim. They'll need a death certificate. But a lot of times, I mean, usually it's within less than a week. You know, if you're working with a funeral home, a lot of time they will call to verify that you do indeed have the life insurance for the person, and then they will go ahead and start. They're not going to wait for they don't have to wait for the check. A lot of funeral homes will give you that leeway until the actual money comes in to pay for the services and all of this. So just keep that in mind. Also with beneficiaries on life insurance and annuities, because life insurance and annuities are two sides of the same coin. Any life insurers, I should say any annuity carriers are going to be life insurers also, because life insurance is for when you die too soon, right? And annuities are for when you live longer than expected, right? Because they can provide a lifetime income for you. So with the carriers that offer them are going to offer both, because they need to have that balance of their books, right? Because they're paying out life insurance for when people die sooner than their life expectancy. And then they're going to, pay annuity payments for folks who need full income for however long they live. All right. So on that same note, a lot of folks ask me, well, what happens to your annuity when you die? Okay. So it's kind of a complicated question, because it depends on how it's set up, if you are taking income or not, and for how long the income and this sort of thing. But let's just say you're not taking income. Let's just say it's a regular deferred annuity. It works just like a life insurance. All annuities are going to have a specified beneficiary on them, or beneficiaries, right? So they're going to pay out to your beneficiary, just like a life insurance would. It works the same way. Annuities got a bad rap years ago when they were all like income based and they were life only, which means they only paid income for the life of the person. And then if they died the next year, then the money went to the insurance company. That's very rare. Now those kind of annuities are less than 1%, and they're specifically for income for the person if they don't have any beneficiaries or heirs to leave it to. So that's very, very, very rare now. Typically they're going to pay out just like life insurance, direct to the beneficiary. On that note too, with beneficiaries, you are able to designate whether you want it per stirpes or per capita. So per capita is going to mean like if you are leaving it to your son and daughter. Per capita means if your daughter passes away, then everything's going to go to the son. That's per capita, okay? whereas per stirpes means it's by the branch is the Latin root of it, I believe. So if you have your son and your daughter as your primary beneficiaries, say your daughter passes away, then half is still going to go to the son, but the other half will go down to the daughter's heirs. So if she has kids, then it will split down to her kids if she has lineage, okay? So just something to be aware of. Usually any insurance agent worth their salt will ask you that and how you want it set up, because you can determine that right on your life insurance or your annuity contract. Okay, hopefully this answered some questions for you guys. If you do have more questions, please call me, email me. It's taurusfinancialsolutions.net. As always, thank you so much for listening and have a wonderful day. Bye.